Welcome aboard, traders, to a new session of charting across the board. Today, we'll be looking at different trading instruments across the board, given the foreign affairs conflict. Therefore, there are some certain assets that are impacting the price action as of now, such as crude, the DXY, gold, of course, risk assets such as Bitcoin, and the equities market with the major indices, the S&P in this case. There has been some selling pressure across equities. Therefore, let's pay attention to what the idea was following the previous week for our technical proposition on the S&P 500. I hope each one of you are doing great. Once again, for those of you who are new, this is Marob6. I am a harmonic pattern trader presenting technical arguments based on the research from the legends of the past, trying to present as much unbiasedly as I can. Here, what you guys can observe, this is the W formation we're working on last week. I want to say that I'm not in the trade, even though this was a trade plan. I was not able to execute due to the timing factor. However, I'm now focusing into the next potential setup that may develop after the, I would say, perfect reaction of a technical proposition we were working on last week. You guys know we were looking at a CD projection in this manner. We're looking for this upward move from the lows on the C leg of the move with a projection into the D point, the PRZ, C as zebra, as the potential reversal zone, where at the point 786 for a rejection at 69.64 in terms of price. That was indeed a ceiling in the price action for the W formation, the bearish Gartley in this case, that completed, okay? We have the move from the lows to the highs that was indeed respected, okay, to the highs, and then a major reaction towards the downside, creating this downward pressure. Of course, the fundamentals are now presenting the narrative, but technically speaking, we already know the shortcut of what the price was telling us as technical traders, okay? In a similar manner, before jumping into the next chart, we have now another views on the crude, okay? However, I'm forgetting here a new chart, also an old chart prior to this W formation. Before I forget, it is important to remind myself that prior to this W formation, I was navigating the scenario as to where the price action on the S&P may go after rejecting the point 786, okay? And a prior chart, prior to this W formation, after new information present itself, of course, we gather new information. This chart was from February 23rd. Prior to this work, I was working on a different, slightly different approach, but similar into the projection as to where the price action may go, okay? This was an idea, technical proposition I had in mind, first as a W formation into the same manner, into the same levels of rejection between 69.49 and 69.69. Of course, we presented new information later as new data sets presented themselves here, okay? The previous technical proposition was if a correction at these highs would occur, then a decline from the 69.64, 69.69 was going to take us all the way to the 1,272 at 66.80. We printed today a new low of 6,700, pretty much 20 points away from the main idea. Okay, if I redraw this technical proposition, you guys may observe that there is no much variation or not much variation. Okay, the previous idea I had in mind was basically a similar pattern. Previous low from the highs to the lows. The previous high was this reactive move to later another low. But you guys can observe this PRC, the potential reversal zone, was the same. Okay, only slightly variation from the completion point from the previous idea. Okay, if I go back into this idea here, a shark into a bullish butterfly. If I reconnect the new data set as to where we may bounce, I can observe already that prices are bouncing from the 67.18 region where buyers presented themselves. Therefore, we are still well in direction if we go into the 1,272 at 66.79 or 66.80. Okay, pretty much the same chart, similar interpretation, slightly variation from the original idea I had in mind. Okay, but the chart basically is the same, as you guys can observe here. Okay, so therefore I can observe some buyers jumping in here at 67.18. If we manage to go slightly lower, I would then look at another major reaction at 66.80. However, there are new information now within this leg of the move. Prices are printing lower highs and lower lows since pretty much this previous peak on January 28. Okay, we have a high, a low, a lower high, and now a new lower high or a lower low than the previous low, meaning a shift in trend. A downtrend now is printed in the price action where the previous diamond pattern now may break lower. But again, it will be important to monitor the reactive move of this pending bullish butterfly at 68.80. Okay, that will be another important point to monitor in the price action for the S&P. Why? Because there are other levels of confluence on the daily, another Gartley pattern or a bullish Gartley pattern that prices may test. Okay, I'm not suggesting we may go into a new all-time high, but as we're moving accordingly, levels by levels, this is another level of confluence if prices are to be tested within the same culmination point for the 0.786 at 68 or 66.80 for the S&P 500. Okay, that will be a level of confluence where a reaction may occur. Prices may jump at these lows, push the prices to where? To the 0.618. You guys know when resistance are defined, we then compute the previous high to the lows, and the new resistance levels becomes to where? At the golden zone for the key technical levels, or the golden mean for the 0.618, 6,900. However, if we compute these previous lows or previous lower high, the next resistance may come at 68.65. That will be the next resistance levels if the S&P 500 were to find support at 66.80, bounce, and then find another resistance at 68.65. That will be the next opportunity if the price action presents itself, either for a reactive move of this bullish Gartley and then a rejection, lack of participation in the event of only bouncing into the 0.618 at 68.65. Okay, currently the price action is neighboring the 6800 once again. That remains as a key level of local support. You guys know resistance remain at 7,000. If 6,800 is lost on S&P 500, we are going to go lower. To where, Marbob? You guys remember the distribution schematic that we presented also many times, okay? The Wyckoff distribution schematic will come into place if this is indeed a Wyckoff distribution. As you guys remember, we were presenting all the other arguments for this technical proposition in the price action for the S&P 500, okay? That seems to be the case. As of now, we presented the upthrust after distribution, after printing a new slightly high than the previous high, but nonetheless, prices remain within a trading range with a declining volume, oftentimes presented as distribution, not accumulation. We need to remember that distribution schematic occur in the upper range after a sustained rally, and accumulation occurs after a decline in the lower range after a major selling pressure took place in the case of Bitcoin. Okay, so now let's move back into Bitcoin. Bitcoin, as of now, is printing slightly higher lows from the previous information. If you guys recall, our technical proposition continues to be for a pending W formation into a 75,000, but also we presented an M formation as a reactive move for a pending, back then, bullish Gartley. We got the reactive move of the bullish Gartley, where at 62,400. If you guys revisit our previous stream, that was a key level to sustain. In the same manner, a 65,000 region remains as a key level of support for Bitcoin. As of now, prices are fighting between 68,000 and 67. Okay? Now, the first reactive move after a pattern completing itself becomes, before losing sight, this is the idea. I'm going to go step by step so you guys are not lost in this technical argument, okay? The previous information, we presented these arguments where the completion point of this pattern, 62,400, was a key zone. A reaction that occurs after a pattern completes itself is known as type 1, where we found a bounce, okay, an upward traction. Type 1 within the harmonic framework. Type 1 often goes into the 0.618 from the previous high to the lows, based on Fibonacci retracement levels. Also, oftentimes within the deepest levels of retracement, being the highs to the lows, to the 0.618 as the main level. Then we have the 0.886 and the 0.886 before printing a new higher low, okay, known as the type 2 return. Type 2 returns on bullish structures or bearish formations are known as true reversal points, meaning that after the first reactive move, okay, the next test or neighboring the previous low may act as a type 2 return in this manner, okay? Type 1, we have the reaction. Type 2 also, as of now, we went from this low to 70,000, okay? Therefore, why do I have these patterns or pending projections in mind? Mainly based on the congregation of ratios, okay? From these highs to the lows, I can observe that this can result as a B point to where? To the 0.886. For those of you who are harmonic pattern traders, you guys know that the 0.886 give us a rating potentially for a pending W as long as the C leg, okay, as long as, I need to make that aware, as long as we're not breaking below 62,000 now, okay, this may be indeed a C leg for either a pending bearish deep grab now in confluence with a Gartley. Keep in mind this pattern. X to A to B, the 0.886 to C, now where? To the golden mean. From these highs to the lows, we have the 1.618 at 66,000. What do we have near those levels? The previous technical proposition in the same manner. Okay, in this case, we compute the X point from the previous high, lower high at 77, I believe, to the lows, back to the highs, back to the lows. Okay, therefore, I'm gauging, gathering new information constantly as long as we're not breaking below this low. And why do I mention I'm not favoring the short now, okay, rather than positioning myself in the long at 60,000, as long as we're not breaking lower, is mainly based on the weekly time frame, okay? You guys know that our main projection was reached at 60,000, and the next one remains for 57 if prices go lower, okay? Our major pattern remains for this cipher pattern. This, of course, is a weekly structure that takes time to develop. It won't jump straight from those lows and go to an all-time high. It takes time to develop a base, okay? Same manner, it took time to develop a ceiling, a resistance before the decline, okay? So therefore, as long as prices remain within this range, I still expect an upward traction. We'll see if we go into the mid-80s or mid-70s, okay? So far, we have a reaction from 59,800 to 72,000. Major move of 21% move, okay? Major upward traction on Bitcoin. Why? I mentioned I'm not favoring a short at this low on a weekly time frame after projecting a 52% decline is also the oversold conditions on the weekly, okay? To me, the risk to reward ratio favors potentially at least a reflective rally. What is a reflective rally? Reflective rallies are often a reaction that prints after a major selling pressure, meaning the prices may print another lower high before breaking lower, okay? That is a technical argument I do have in mind until new datasets present themselves. I'm not rushing, I'm monitoring the levels by levels on the hourly and the 4 hour, but keeping in mind the major framework. As of now, our levels were reached into the 60s, okay? We're still there pretty much since early February, and now we're having an intersection between price and time expected for March the 9th, followed by April the 6th, okay? So once again, keep the major patterns in mind. You guys know that larger patterns tend to supersede any other time frame, especially when they are finding in the same direction. Clearly, we have been in a downward pressure. Therefore, it's where to be assumed that W formation or bearish structures on minor time frames will continue to outperform any bullish pattern. But we're also giving the benefit of the doubt to the bulls now after suffering a 50% or 52% haircut. That hurts, my friend. 52% haircut at the highs, especially for those proponents of the 250,000 mega cycle, super cycle, 1 million BTC. You guys know the narrative oftentimes is not as what we intend to expect or we expect to the price action to do, okay? We have major decline, therefore now we are favoring the buyers to present themselves, where if we look left, also we mentioned before, looking left, market leaf clues. 64,000, 60,000 was a previous all-time high from the previous rally prior to the major decline. Okay, we mentioned this before many times, looking left, market leaf clues. So where are we now? Pretty much at the lows, potentially for a lower risk area. Okay, but again, none of these represent any financial advice, but rather a technical proposition for educational purposes only. Everyone, let's take a look at gold briefly. Gold has been pretty much in a major bullish run or bull run since pretty much the entire 2024 and 2025. The previous low on gold, there was a major cap and handle for those of you who were not looking previous to this major move, okay? Of course, this has been 4 years ago now in September 2022. That was pretty much at the handle at 1800, where we also had an information then, okay? Now, major upward move. Of course, in between, there were other patterns, short, long, in between, but the major move came from this major gap with handle, okay? One of the conventional patterns that continues to be respected. However, after entering overvalue conditions on gold, extremely overvalue conditions, printing a reading of 96 or 95, gold, clearly, there will be early buyers taking profit at the highs, okay? That seems to be the case as of now after printing a previous high at 5,600, where gold printed yesterday a W formation. You can pay attention at the PRC here, the completion point, or Monday, I believe, Sunday or Monday, we printed a W formation, now reacting, okay? Clearly, we have a high, a low, or a lower high in this case. However, now, if gold were indeed entered into distribution schematic, we normally know that they present as a trading range for Wyckoff distribution, reaccumulation, and so on. As of now, we're still within the previous hard line, previous support at the B point at 5,000. Key psychological level buyers are still defending the 5,000 region on gold, okay? However, once again, if we're seeing another retest of the previous low or near those lows, I can compute another cipher pattern here on gold that may act as a bullish cipher if we go into the 4,600, okay? Or the 0.886 at the lower trend line, 4,500 will be another support, okay? There is much work to be done here on gold, but we're observing some exhaustion levels at the highs of 5,600, okay? Now, to finalize the stream, I want to mention that since gold, or moving back into the crude here, we have indeed this chart from October 15, 2025. As we're presenting a potential top on Bitcoin, there were other assets, other commodities that were presenting accumulation levels, okay? So there was indeed some rotation, some level of interest among other instruments rather than Bitcoin. While Bitcoin was topping, the crude was bottoming. And we're observing now a clearly reactive move. We compute from the main support that was between $57 and $55. We have an upward move as of today, 41% move to the current levels, 37% move. Major upward move here on the crude. Great for the oil traders, okay? Our interpretation was indeed respected. Now, the only issue that I see with the crude is that this may impact inflation, okay? For those of you who remember, let's revisit our chart on inflation, okay? The inflation chart does not look as promising, or indeed, or should I say, it looks bullish. That will be negative for us, okay? The chart on the crude or the S&P, on the inflation chart, the USIR, the US inflation rate yearly or year over year is now presenting a reading. It was already presenting a reading of 2%. We presented this decline into the interest rate or the levels, the percentage levels on the crude, getting confused here, on the price action, on the levels for inflation rate presented lower lows and higher lows in the momentum indicators, implying class A bullish divergence. Therefore, the inflation rate, the readings on inflation may start going higher. Why? Because crude is also a major component. If transportation goes, or if crude goes higher, the transportation of services and goods also climbs higher. So therefore, let's pay attention to the readings on the inflation chart that has been respected as of now, presented a reading. Previously also, we were working on this W formation back at the top. Because remember, 2022, we're looking for a potential topping action around 9% on inflation, with a decline to where? To the current levels, mainly at the common areas of retracement. From the lows to the highs, we're looking at the 0.618. 3%, of course, afterwards come the deepest levels of retracement that goes to the 0.786, okay, and the 0.886, neighboring those levels. Now, the reading I see here is a divergence between the readings in the percentage for the inflation rate and the momentum indicators presenting bullish or class A bullish divergence or positive divergence in the correct manner, okay? So this may trigger some more selling pressure on the equities market, as we're observing clearly that the S&P 500 is presenting a distribution schematic as of now, setting pressure. Buyers or sellers are in control, okay? And if we go lower, how much lower can we go? Because remember, we mentioned previously that the previous high may act as a main level if prices were to decline to where the previous short execution from last year. Because remember, 6,300, 6,100, that was the key level, the previous high on last year, early last year. Okay, it's been a year now. Therefore, I mentioned that anything above these levels to me remain as levels of concern. The periods of risk, 2025 and 2026, are here. Now that I want to take credit of it, but we may also another projection that I do not would like to. I don't want this chart to be respected. Why? Because it's one of the scariest one that may lead to WW3. I don't want to say the name, but it was a projected move that if prices on equities were to achieve a new all-time high, breaking the previous all-time high from 2021, I believe, back then, since our rating was from 2023, we mentioned that if we go into this high, what may occur? We're now seeing all of these variables unfolding that again, I don't want to take any credit because this may be one of the scariest development that may occur. But let's trade accordingly, and all we can do is hope for the best. Everyone, thank you for being here. Remember, this is not to be bearish, to be very negative, rather reading the chart correctly, okay, with an unbiased perspective. Everyone, thank you for being here. This is Marvel 6. I'll see you guys on the next one. And remember to live a life with an attitude of gratitude. Cheers.